how much is the strength of the yen then also down to investor concern about the U.S. fiscal outlook? I mean, I know that you say there has been a deal essentially reached. There is some agreement, so some reason to be positive. But nevertheless, the underlying debt burden problem is still very much there. So, you know, if the yen strength is coming from this sort of safe haven demand, how effective would intervention in the market be anyway?
Well, safe haven demand is one thing, but you have as well to look that the Japanese yen only weakened in the past when there were periods where there were favorable bond investments abroad available. And it looks like that within the developed world, that is no longer the case. You have in many cases, you have negative real yields. You have, in other cases, risk premium running at exuberant levels, making that very unattractive for Japanese investors to take funds out of Japan. And the third factor coming into play is that Japan is running increasing deficits on its own, on the government side. And that actually means that it needs its own savings to be invested into the government bond market to ensure that bond yields are not rising. So under those circumstances, you will have dollar yen still under selling pressure.
Okay, so then talk to me a little bit more also about the prospects for the dollar, because we had weaker than expected manufacturing data. Some would say this increases the risk that a rebound in U.S. economic growth won't materialize in the second half of the year.
I guess that we are we are currently seeing some similarities to the year 2008. At that point as well, we had too many in the market arguing that the U.S. problem would create a U.S. dollar weakness, not understanding that when the U.S. problem becomes too big, it becomes a global problem, and then you have assets which have been performing in the past and funded by dollars being closed, and that actually means as well the dollar funding position being closed. And under those circumstances, you are getting US dollar strength, but you need to be careful. There's going to be a split market. It does not mean dollar strength against yen or the Swiss franc. Under those circumstances, it would be dollar strength against Australia, against the euro. And then, of course, we still have to talk about the very specific situation we are currently facing in Euroland. We have seen this morning again spreads widening. We are seeing that our bond markets are no longer homogeneous. The flow of funds into Euroland is weakening by the day.
That's a really nice way to actually conclude our interview. Thanks very much indeed, Hans-Guenter Redeker, Global Head of FX Research, Morgan Stanley. Good to talk to you.